Good afternoon, everybody. It's really a great pleasure for me to be here with all of you. We saw some outstanding sessions yesterday, and Governor was so very inspiring yesterday. So thanks to all of you over here and to Governor for setting the tone. I just loved the session. I was hearing all of it, and Arvind and Zia, and they were all fantastic. So thank you very much. I'd like to pick some of the threads they left there. And, this Kal, Aaj and Kal, the subject given to me is a pretty large subject. No one can cover Kal, Aaj and Kal in 20 minutes or so, or maybe 30 minutes. But I'll keep it very swift for you as to what is the key theme that I'm covering in today's session. The theme of session that technology does not differentiate between the rich and the poor, and how this can be utilized to maximum effect to take banking and financial services down the pyramid. That you can think of it as a theme. Not only does it not differentiate, it actually enables access to markets which otherwise you cannot reach through the conventional means. Now, if you see the pyramid of, let me call it the economic pyramid, you'll see that whether in most services, you'll find the affluent people, emerging affluent, mass affluent, and Mumbai, for example, you'll see, this is really photographs taken by me when I went on a run, and you could see the rich people on the way to the sea link, and you'll find maybe say affluent, you'll find mass affluent, you'll find mass, you'll find strugglers, you'll find all sorts of people, but if you notice, payments, fortunately, to the revolution of UPI has now reached almost to the bottom of the pyramid. Savings, almost there. You heard the governor speak yesterday about, I think, 70 to 80% of the country. That's pretty good from where it was even 8-10 years ago. Credit, somewhat. Now, of course, microfinance has reached down the pyramid, but I'll show you some numbers later about how deeply underserved credit in the country is, and I'll show you a video for that. And when we say, therefore, that credit to GDP in the country is only 19, the world is at 80, 90, 100, whatever, I just want to show you that these are not just statistics. I'm going to show you in real life people how credit-starved India is by some live interviews, not live, but by some recorded interviews. Investments, it's practically here. People who are having the affluence, you have relationship managers, you have wealth managers, people who tell you which mutual fund to invest in, you have AIF, you have PMS, you have all this sort of stuff. But people down the line, for you, maybe wealth is maybe a crore or 50 or 20 lakhs. But for a person who's poor, for that person who's earning maybe 15,000 a month, for that person on 1 lakh is wealth. But there's no wealth management for them. And how to take it there, how tech will help, and how insurance, of course, it's important. If you see the needs of people as such, the needs of payments, for example, rich have the need, poor have the need. Need for insurance, I'd say that, everybody needs insurance, but poor probably needs insurance more than the rich because, they have a health problem or they have an accident, they're literally gone because there are no savings to fall back to. Again, if you look at the needs in terms of maybe credit, everybody has needs. In fact, people down the pyramid have more needs, I would say, because they are really hand to mouth. I have done interviews of literally maybe hundreds of people in my day-to-day life over the last maybe 10, 15 years. I talk to many. And I typically find people like the Nariyal Paniwala and the Bajiwala and all the people on the roads, typically they all earn anywhere between 12, 13 to 15,000 rupees a month. That's what they make. Even taxi driver makes only that kind of money. So for them, literally the bank account is typically cleaned out literally end of the month. Thank you. So the bank account gets cleaned out end of the month. So literally, they also have a need for savings. Everybody has needs for transactions. The needs are there all over the place, whether rich or poor. But the problem is that anyway, the poor have the same needs, but everything is expensive for them. Water is more expensive for the poor than the rich. Electricity is more expensive for the poor than the rich. Credit is more expensive for the poor than the rich. Everything is expensive for the poor. That's ironical. The poor people and the higher, it's more expensive. And technology can break the barrier, and no amount of socialism, no amount of nationalization of banks, this, that, nothing will help for 30, 40 years, or maybe 50 years. I mean, something happened, but it didn't happen a whole deal. Then why was India underbanked until nine years ago? So our bank accounts were not opened, our credit was not available. I'll show you why. This is how banking system is run. or was run until recently. And literally, if you can tell me that these branch managers sitting here, 8 people crowded on that head, really can they really do, can they reach out to small entrepreneurs? No chance. They're just, just managing. Can they find people who needs credit? Can they lend? Can they monitor? Can they collect? No chance. Can they manage asset quality? No chance. Could they provide quality service to customers? No chance. So this is the ecosystem that India lived practically for maybe 60, 70, 80 years. Now, this of course is changing because of technology. And let me tell you, no wonder therefore, when you're banking like this, there's no wonder there was no access to credit in the country. Of course, there are many other reasons we'll discuss. Other countries are 100, 120, 150%. And India's consumer credit to GDP is more like 19%. And just that to give you some real numbers to it, this personal credit in India is 55 lakh crores. And GDP is 272 lakh crores. That's 19%. If you add another MSME credit on top of it and add agri credit on top of it, it's still pretty low. Now you should not be surprised why. Now, let me also share with you, I actually met some customers in this segment. I'll show you the video about the need. I mean, it blew my mind. I think it'll blow your mind. I simply asked a bunch of 30 borrowers, how many of you need a home loan? And just watch the video. I hope the audio plays. So I don't have the pen and scribbler with me, but I'll try my best. So basically, if you think of, you got to go back, friends, a little. Just start again, yeah. Start again, yeah. Yeah, fine. Let's move to the next page, yeah. Now, if you see the social strata, now people earning 20 lakhs plus, 10 to 20 lakhs, 5 to 10 lakhs, so on. Now, typically, if you see payments, it's penetrated right down. Savings, almost well penetrated by now. Credit, less penetrated. I'll demonstrate that to you. Investments, like I said earlier, really it's not that India has very many people investing in mutual funds, etc. Numbers increasing, we know it's 10 crores, but it's still a small number when you see the country. And if you see the life of people who are earning 5 or 10,000 rupees or 20,000 rupees, even 1 lakh is a lot of money for them. And they also need wealth management. We'll talk about how. And of course, insurance. We talked about the fact that they have more need for insurance than the rest of the Indian system. Let's next. Now, the reasons could be many. Most issue in terms of challenges are about, in the case of savings, it's high cost to serve, branch interface, investments, high cost to serve. In the case of credit, high cost to serve, plus an issue about credit cost, and so on. So in the case of insurance, it's probably even literacy or even awareness that they need insurance. In the case of investments, they don't even know what the meaning of investments is down the pyramid. Okay, next. Now, we all know tech can bridge that. Let's move ahead. Now, this is how largely banking has been done. And at least for a while, until, let me say, recently, I don't even know how many branches operate like this. But really, if this is the life of a typical, executive at a branch, at people queuing up, you can see the one on the bottom right-hand screen, how are they going to assess credit, how are they going to lend, how to monitor, how to connect, how to get asset quality? This is the reason why you go to the next slide, and you will actually see that, next slide, I'm rushing in the interest of time. You'll see why India's credit is running like 19% to GDP, while most of the countries are running in the zone of, say, 70, 80, 100%. At least all the developed countries are out there. Now, it just also means that it's a bit of a lost opportunity for the country, not just economically, but also a lost opportunity for the country in the sense of the lives of people, generations have gone by without having the ability to borrow, to educate, maybe borrow to have better white goods, better appliances at home, and so on. And generations have been lost. But let's see how to fix those generations going forward. Now, you heard about credit GDP being less and all that, but I'll just show you, just click the first one about the need. I just asked in the group there, housing loan யாருக்கெல்லாம் வேணும்? பணம் கொடுத்தா வீடு வாங்குறது எவ்வளவு பேர் கை தூக்கு? They need it. They need it. நான் கேக்குறேன் எவ்வளவு பேருக்கு கொடுத்தா ஹவுசிங் லோன் வாங்குவீங்க? நீங்க வாங்கிப்பீங்களா? housing loan, housing loan, housing loan, housing loan, housing loan, 70%, housing loan, housing loan.
How much rent do they pay?
எவ்வளோ ரெண்ட் கட்டுறீங்க எல்லாரும் நீங்கள் வாடகையில் இருக்கிறீங்கல்ல எவ்வளோ ரெண்ட் கட்டுறீங்க எவ்வளோ வாடகை எவ்வளோ கட்டுறீங்க நீங்கள் 3000 கை தூக்கு யாராவது வாடகையில் இருக்கீங்க நீங்கள் எவ்வளோ கட்டுறீங்க 4000 நீங்கள் 5000 நீங்கள் 4000 கையில் இருக்கீங்க. So, can you imagine when we say India is underserved? It was shocking to me, by the way. All I had asked this group was how many people need a housing loan. You could see the list. At least 20%, 30% people went up housing loan, which means nobody's lent to them. And we've had enough, banks been around, and we opened rural branches, etc. So let me move to the next one. Then I asked, are you able to hear the audio from their friends? Just to double check. I don't want to play it otherwise. Now, this is the second one. I asked them, how many of you want a business loan and what will you do with it? Just hear this conversation. Okay, I asked them, how many of you need 1 lakh rupee loan? Yeah. அரிசி கடைக்கு பணம் வைக்கணும். கை மேல வச்சுக்கோங்க. ஒரு நிமிஷத்துக்கு உங்களுக்கு எது பணம் வேணும்? என்ன பண்ணுவீங்க? எவ்வளவு வேணும்? 1 lakh வேணும். எதுக்கு வேணும்? மளிகை சாமான் கரெக்ட்மா. சாமான் கலை சாமான் எதுக்கு 1 லட்சம் ரூபாய் வேணும்? இருக்கு புரிஞ்சு உங்களுக்கு கை கொடுக்குறீங்களா? உங்களுக்கு எதுக்கு வேணும்? ஒன் செகண்ட். உங்களுக்கு எதுக்கு வேணும்? வீட்டுக்காரங்க எந்த வண்டி வாங்கணும்? ஆட்டோ வாங்கணும். ஓகே. உங்களுக்கு எதுக்கு வேணும்? உங்களுக்கு எதுக்கு வேணும்? கார் வாங்கணும். சரி. ஆனா 1 லட்சத்துல கார் வராது. நீங்க எவ்வளவு போடுவீங்க? 150 நீங்க வச்சிருக்கீங்க. நான் 1 லட்சம் கொடுத்தேன். புதுசாவே எடுத்துருவோம் சார். சாதாரணமா மிடில் கிளாஸ் 1 லட்சம் கொடுத்தேன். அது இன்ஸ்டால்மென்ட் 3500 ரூபாய் வரும். கட்டிடலாம் சார். கட்டிடலாம். பிசினஸ் லோன் உங்களுக்கு எதுக்கு வேணும்? பிசினஸ் லோன் டெய்லரிங் கடைக்கு. எதுக்கு டெய்லரிங் கடைக்கு? எவ்வளவு காரணம் எம்ப்ராய்டரி மிஷின்? ஓகே. உங்களுக்கு எதுக்கு வேணும்? மளிகை கடை. எவ்வளோ அதுக்கு மளிகை கடையில் என்ன பண்ணுவீங்க? அதுக்குள்ள ஆல்ரெடி உங்களுக்கு மளிகை கடை இருக்கா? அதுக்கு அதுக்கு 1 லட்சம் என்ன பண்ணுவீங்க? இல்லைம்மா
10 கிலோ அப்படி வாங்கி சேல்ஸ் பண்ணிட்டு இருக்கோம். நீங்க 1 லாக் லோன் போட்டு கொடுத்தீங்கன்னா சிப்பமா இறக்கிடுவோம். நம்ம மூட்டையா இறக்கிடுவோம்.
ஆனா மாசம் ஒரு 4000 ரூபாய் கட்டணும்.
கண்டிப்பா முடியும் சார்.
கண்டிப்பா முடியும். உங்க ஃபேமிலில யார் இருக்காங்க? ஜஸ்ட் பாஸ். Yeah, in the interest of time, basically you see this bunch of 30 people. I asked them, how many of you want a business loan? And at least 20 of them want a loan of 1 lakh rupees. So you saw the point. Now, you might say that, banking system is not lent to them thus far because they don't have good records or inability to prove they can pay, or our own inability to reach them. But sometimes we question their economics. So to one of them, in another meeting, in another city, I asked them for the economics of a particular profession they follow. Just have a look at that. It's in Hindi, so hopefully you'll get it. Yeah. तो मतलब अगर साल में आपका 1-1.5 लाख का कमाई है, तो मतलब महीने का 10,000 एक परिवार में, उसमें 10 लोग रहते हैं और निकल जाता है. शौचालय क्या करते हैं लोग? सर घर पे, सबके घर पे, सबके घर में हर परिवार पे एक शौचालय. हर परिवार में. ये कब से आया है? ये सर अभी पिछले साल
2013 के बाद से. 2013 के बाद से.
उसके पहले लोग क्या करते थे?
जंगल
लेके जंगल में जाते. जंगल सच्ची में. शौचालय देखें तो उसका जो सामान वगैरह कहाँ जाता है? शौचालय की सफाई कैसे होती है?
गड्ढा सेफ्टी टैंक.
तो जब शौचालय बना उसके साथ में टैंक भी
बनाना पड़ेगा.
हमारे बैंक से आप में से कितने लोगों ने कर्जा लिया? हाथ है उठाए
सर. वो करीब है 12
बैंक से लिया.
फोटोग्राफर
दोबारा हाथ उठाइए. हम तो आपने कितना लोन लिया?
सर मेरा 2.5 लाख का था.
2.5 लाख का.
9,710 रुपए किस्त
महीना का लोन लिया.
बस IDFC से.
किस चीज का लोन लिया?
दूध
आपने भी दूध
पे सर दूध पे ही लोन लिया. सब दूध पे ही है ये.
और किन्होंने हाथ उठाया था? आपने भाई साहब किस चीज़ का लोन लिया हमसे? हाँ जी, मतलब दूध पे लिया का मतलब क्या है एक्चुअली?
जानवर लाए उससे दूध
जानवर लाते हो? तो एक गाय कितने का आता है?
40,000-50,000।
आपने कितने गाय खरीदे उससे?
3 गाय।
हाँ,
3 गाय है।
तीन।
घर का भी जानवर है।
ठीक है, तो 3 गाय खरीदे आपने। तो 3 गाय कितना दूध देती है?
6-7 लीटर दूध दे देती है।
एक गाय देती है। और कितने में बिक जाता है? 6 लीटर कितने में बिक जाता है?
ये 40 का भाव में जाता है।
तो 40 गुना 6, तो 240 रुपया। तो वो पूरा अपना हो गया। वो एक गाय से आता है। और कितने महीने में कितने दिन दूध देती है?
पूरे साल चलता है सर। दोनों टाइम देती है, सुबह शाम।
नहीं, लेकिन वो दोनों मिला के बताया ना उन्होंने।
एक टाइम
एक टाइम का है।
एक टाइम का बताया। सो दोनों टाइम मिला के कितना?
12 लीटर।
12 लीटर। तो 12 गुना
40।
40, 480 रुपया दिन का आता है। एक गाय का।
बट सर उसमें खर्चा भी है।
अभी आता हूँ। इंटू 30 दिन कर लो। हाँ, तो 480 रुपया गुना 30, तो 500 इंटू 30, 15,000 का कमाई हो गया एक गाय से। और 15,000 में खर्चा कितना हो जाता है गाय को संभालने में, खाना पीने में?
कम से कम 5-6 हज़ार रुपये खर्चे लग जाते
एक गाय पे। तो 15,000 में 6,000 गया, बचा 9,000। ठीक समझ रहे हैं? 9,000। लेकिन ये तो गाय का बहुत जल्दी, अगर आपने 40,000 में गाय खरीदा और एक महीने में हमारा खर्चा काट के 9,000 बन गया, फिर तो 4-5 महीने में उसका पूरा पैसा वापस आता है।
हाँ, ज़्यादा ना।
और इतना डिमांड है दूध का।
हैं। डिमांड तो बहुत रहती है।
तो आप लोग साथ जाके अपना दूध कहाँ देते हैं?
सर इंदौरी हम 2 खरीदते हैं यहाँ पे तो।
अच्छा,
और में ये पूरे गांव का दोनों खरीद लेते हैं, यहाँ से हम इंदौर
आप
पहुँचा।
इनसे लेके
हमारा कमीशन रहता है सर।
वो तो ठीक है, लेकिन गाड़ी
पिकअप
ट्रक
हाँ,
आपके पास?
हाँ।
अपना आप जरा दिखा सकते हो ट्रक आपका कैसा यहाँ पे है?
सर वो गाड़ी तो गई, अभी नहीं है, अभी 3 बजे आएगी वो।
So thank you very much for watching this video. So you now see that we've done this discussion for many professions. They are, and you could see very well, about 8 or 9 months, he's getting his returns back on that cow or buffalo. Done this job, discussion many professions, their ability to pay back. No wonder in this segment, NPA is like 1.5% gross or 1.8%, net is like 0.4, 0.5%. So this is a pretty good segment. But if demand is so much unmet and capability repays this good, we have to ask ourselves why we have not financed them. And therefore, what are we going to do about it? So therefore, this leads us to the next part of the discussion about the various technologies. If you see, one of the important things to note generally in life is that everywhere there is business class, economy class, 3-star, 5-star, hotels, banking with private bankers, but technology is the only one that doesn't differentiate. Okay, ATM gives you the same amount of time for giving a cash, whether to a poor person or rich person. The UPI transacts in the same fraction of a second. So this is a very big opportunity ahead of us. Let's move ahead. Now, this is a very important point to note. Now, this is a very, very important one for us, for all of us to note, that fundamentally the ecosystem in the country has dramatically changed in the last, let me say, 5 years, or let me say 8 or 10 years specifically. Now, if you see KYC, this flow from top to bottom is the typical flow of a loan. First, you evaluate KYC. In the KYC, earlier it was physical, now it's biometric. So physical, it was bank license or passport copy, you could fudge it, somebody could do something to it. But now, it's a biometric, much more safer. Next is risk scorecards. Scorecards were regression and judgment based. Now scorecard is machine learning based, much more, let me say, better risk management. Bureau. Earlier, 5-6 years ago also, the Bureau had only 300 million records. Today, Bureau has 600 million records. So that much more data, and even awareness about Bureau, sensitivity about Bureau has dramatically shot up. People are sensitive about it. Fraud.
Earlier it was static photo check, now it's live facial recognition. The traditional eyeballing model versus the automated model. Cash flow evaluation, a physical copy. If somebody is to give this cash flow evaluation models, now all the OCN and ONDC, all these things will come up. But until that time, cash flow evaluation was somebody used to go to the customer. The worst model was to ask the customer income tax return. Income tax return, that profile anyway can't give you, so they're never eligible for a loan. But even those who could give income tax return, they would give you income tax return. Income tax return is not the same thing as cash flow. And who's paying you back under the cash flow is paying you, not the, the IT return itself. So therefore, if you even got a bank statement of account, that would physically come to the office, someone would data enter, there would be errors, etc. Now it's coming to PDF. Collections used to be telecalling, field collection. Now it's coming to UPI link. You're not calling people, just sending them a link and people are paying you. Monitoring was batch mode, now it's real time. So fundamentally, this, what you see on the right-hand side, is a very important part of the progress of the bank. I mean, of the entire ecosystem. It is on these, I call these guardrails. Now, this is one of the reasons, at least we feel, that fundamentally and structurally, step by step, has now become a far more controlled ecosystem, whether it is KYC, income verification, booking, collections, operations, monitoring, whatever. Now, the thing is that on those guardrails, today India's personal credit market, small business credit market, agri market, that's like 86 lakh crores, that's $1 trillion. If you just extrapolate by 16% for 5 years, 15, 14, 13, still going to be a $15 trillion market in 20 years. And 20 years, by the way, don't think of it as too far. We've seen it happening last 20, 30 years in our life, it will happen again. So it's a very big story waiting for us to take. I think it's a bit of missed opportunities before, but hopefully now we'll catch up. Let's keep moving, folks. We're short of time now because we lost time earlier. Now, this is a very big change that happened. Now, the set of data sources that are now available, form of credit bureaus, financial statements, internal transactions, offers transactions, form of account aggregator, e-commerce, GST, customer interaction, digital footprint, cell phone location. All these things have become very powerful means of identifying information, and these are all sitting all over the ecosystem. Our ability to assimilate this data, use it effectively, and put it to good use, and convert it and make meaningful decisions out of that, and then monitor the portfolio, it's our ability now. The systems all exist. Okay, keep moving, folks. We are short of time. Now, I'm short of time, so I'm not going to run through this, but basically to let you know that a large number of technologies are coming together, and it is our, and all of these will affect and, let me say, improve banking services. Let me talk of ecosystems next. Yeah, in terms of account ecosystem, you know that account aggregator is coming. All of you know, so you're in this NPCI gathering, so I won't expand that to you, and you heard about that yesterday. But basically, clearly, you can see that you can see the number of, you can transparently see the customer's bank statement. In multiple bank statements, you can aggregate them together. You can see a single statement account for the customer and so on. That will be very useful. Now, on the basis of this platform, digital lending platform, with these guardrails, data, cash flow, and technologies, they open dramatic opportunities for digital lending. Let's move. Now, this is a very important point to note. At least for our bank, we have been noticing that we lend in this space, but of course we also do home loans, we also do car loans, we do all these things. But in this space, particularly lending to kirana shops and small entrepreneurs and consumers, we're lending 30 million loans. 30 million loans we've given there, and NPA never crosses 2%. How is it possible? And it has been so during, I can't say during COVID reached 4%, but before that, it was 2010 to 14 was economic slowdown in the country, interest rates were rising, then 2016 was demonetization, then 2017 was GST, then 2018 was ILFS crisis, and then, of course, then after that, COVID. So through all of these crises, how can NPA of the system continue to hold so well? This is a very fundamental reason, and the day we get this, I think we will be able to appreciate this segment far better. The key point is that lending to this segment is become, of course, much better now, easier now than before, but it's on cash flow. This is very important. For example, if you ask a customer, show me a bank statement, and the customer tells you that you can see, you're not sitting and guessing how many cups of tea is selling and multiplying it by number of cups into 5 rupees. You're not doing all that work. Basically, you can see the statement of account, and you can see that the customer has a bank balance of, say, 1 lakh rupees all through the month. So now you know that you can give the customer EMI of 50,000 rupees, the customer will honor. So you think that the interest rate is 15%, you see the tenor is 3 years, you back calculate the loan amount such that the EMI comes to 50,000 rupees and lend to the customer. Cash is in the bank. Number two, part two is very important. Mandate from the customer to debit the bank account of the EMI repayment. One, the money is there. We've seen it. And number two, the ability to pick it up from there, because we have a right, we have a mandate. These two are a very, very powerful means of evaluating asset quality. Now, I gave you just one example of bank statement. Now you can extrapolate this logic to GST. GST is the most powerful thing. Last I heard was like 1.3 billion, GST invoices, e-invoices. I hope you know that above 5 crores, you are compulsorily have to file e-GST, e-invoices. And 1.3, that's like, insane number of GST invoices going on. And then you multiply that by 12, that's like 15 billion pieces of invoices going around every year. That is 2 years ago, must be even higher now. So that's a very powerful means. Then bureau estimation models, you can go to the bureau, you can find in the bureau, this customer is honoring how much of EMI. So the customer's EMI on the bureau is say 50,000 rupees, you know the customer's income will be a lakh of rupees, then you reverse calculate and so on. So these are very powerful means for coming through. Let me move ahead. And now, on the basis of this, at least our bank, we have managed to finance construction of toilets. Who would imagine that, a toilet? Now, theoretically, I don't think this use case even existed. Financing of renovation of extension of existing toilets, septic tank installation, we financed that. We financed toilet for handicapped people, then sewerage, then rainwater water harvesting, hand pump bore wells, water security purifying systems, water connections, so on. You can go to the next page, and you can see the performance of the portfolio. We financed 227,000 of these. That's 744 crores. Collection rate is 99.7% with NPA of 1.5 and net NPA of 0.3. So, would you be better off lending to this segment which is doing a genuine social impact, or you want to lend people thousands of crores to people who fly away to some other countries? So the thing is that we really have, we have an opportunity. Now, when we, once we talk about, we just talked about the credit front. Not just, I don't mean only flying to other countries. I even mean, sometimes, people sometimes give you security of a cement plant or a steel plant or a printing press, or what are you going to do with this printing press if the customer defaults? Really? Can you sell a printing press? Show it to me. Show me one printing press and I'll But on the other hand, if someone gives you cash in the bank and given you right to touch their account every year, what's more secure? I find it really very secure. I find it pretty good. It works, and it worked for us for 13 years. And in fact, the entire banking system is running on that model, by the way. Because if you notice, it's not just our bank. Any of you try taking a loan, the bank will ask you your monthly statement, your income, your cash flow, they'll take a debit mandate. So the system is working. And no wonder, therefore, this portfolio not only being diversified, because the repayment model is more secure, you're able to pick the money, you're much safer. Now, this concept, what we said that we could take it down the pyramid with the use of technology, GST, invoices, etc. Now, the same concept applies for the rest of banking. And in the rest of banking also, now you think of a statement of account. Now, forever and ever, banks sent you a statement of account, they sent a statement of account, which is fine. It was like passbook, now it's come physical. But it's not the same thing, because now you can say that, with the power of technology, you can now analyze the statement for the customer, and then you say, listen, on an average, you kept so much balance. Your monthly EMI is, 2 lakh rupees, but you don't seem to have the money in your bank. Send you some information about it. Or analyze the customer that you're spending so much on dining, so much on this, so much on that, so much on education, you're going overboard. So you can do value-added, insightful conversation, but now that you could earlier give it only to the rich, but now you can give, because it's this machine that's running, these bots running these queries, you can do it for anybody. So again, it flattens the curve, and people down the pyramid can get value-added services because no human being is sitting and doing it. Because the moment a human being does it, you can't do it. You can't afford it. Similarly, wealth manager. Until a balance of customers' wealth is anywhere, AUM is anywhere between, say, 30 lakh, 1 crore or so, you can't make economic sense of allocating a relationship, and that's a cost of RM. But on a tech platform, you can now analyze. I once met a a teacher. She was teaching my child, and I was asking her, how much do you have? What's your income? She said some 70,000-80,000 rupees. Then I asked her, how much is the bank balance? She said 3 lakh rupees. I said, where is it lying? She said, lying in a bank. And what rate of interest? It is what banks give. And I asked her, how long has it been planning? She said, like, since ever. And I said, really? You really think you could not have made better use of this money than this if you really had long-term money? She said, I don't know. And by the way, this is not some rural customer living in some hinterland. This is a, Bombay-based lady who's well-educated. So the level of financial education for people to deal with money I often ask doctors about their income and all. They have money, they just don't know what to do with money. They are all into antibiotics and all doctors and surgeons. They don't know anything to do with money. Teachers don't know what to do with money. So this is a real issue in the country, and therefore, and you can't afford relationship managers for them. So this capability to analyze the information of the customer, now again the power of data and technology, because power to say that the customer has information of what is transacting with the own bank. Number two, you have information of what the transaction happening at banks other than yours. You know also the customer's demographics, life stage, age, income, etc., number of dependents, etc. You also have, which is also there with you, you also have the inflow of information about how much flow of money is coming inside and outside. We also know the level of assets the person has in terms of what loans and insurance and investments they have. You can combine all that, make some meaningful conversation about that, and then you can be able to provide this through some technology back to customers. So banks are developing this, and I think these things will reach. But again, it can go to the bottom of the pyramid, which otherwise you could not reach with the expected relationship managers. Same logic about PFM, same logic about stuff. So just to close the presentation, we're short of time, so let me hurry it up for you. That, no amount of the country's effort to, let me say, nationalize banks and, socialism and all that, they really never worked. Why were people poor all this while? At least now some 280 million people have come out of poverty. Why were they, right, all this while? So it's not to say people didn't work. A lot of banks, a lot of institutions did a lot of work and the country progressed, but that's all they could do in that ecosystem and that kind of manual work life. But that was then. But today, with the reason of technology, we talked about the ecosystems and all that, market opportunity, really technology plus market opportunity where I sometimes hate to look at everybody calls it opportunity. I feel it's a bit of a cruel joke to call, people funding people below the pyramid, to call them opportunity. It feels like a doctor who says, somebody has cancer and it's an opportunity for me. It feels that bad. But it is, nevertheless, it's a market. Let me put it like that, to be more politically correct. And no, to be more sincere about it. So let me say that. So let me say market. So the market out there. Then the facilitative policies, both the RBI government have been really powering this up. Like I've never seen anyone do this before. You heard governors speak yesterday. You see the kind of efforts that's coming from the government. You heard even in the previous panel the kind of work going on. So that kind of facilitative policy, and then intent. For example, financing toilets, an intent. We have enough business to do elsewhere also, but it's an intent, wanting to do it. So, if you put these four together, then I think not just, I really don't mean only lending. I mean lending and financial, let me say, insurance and investment and wealth management. All of these can reach a bottom of the pyramid because, like I said before, wealth, even 50,000 rupees for a person earning in the lower pyramid, that's wealth for that person, and we should figure out a way of respecting that. So thank you very much, everybody, ladies and gentlemen. Thank you.
Hi, this is Sanjay Panda.
Hi, Sanjay.
I am a happy customer of IDFC Bank because my salary account with IDFC Bank when it credit. Salary credited my account. I always being happy. That's how the journey come. The second is that I am CSR awardee from many aspects. I always think that when the most of the bank think about HNI customer, what promote Vaidyanathan to think about grassroots kind of people to make them global. So it is always your thinking on the grassroots level, how they leverage their financial, how they can make their wealth out of it when people, those who never think giving loan to those kind of people, you are always thinking how technological leverage they can get the loan. And you talk once that their NPI is also very less on that case. The trust factor, what promotes you to think? Is it B. Vaidyanathan is a social person also, that's how the changes happen, or?
Hello. Yeah. No, it's not just about me. I think everybody's thinking about it, and people in the banking system are thinking about it. But RBI thinks about it, and government thinks about it. Many people think about it. But the thing that I think about is that I feel very inspired also when I see people below the pyramid who are smart, very capable. I sometimes find it a tragedy also that if only this person had this kind of support system where they could be. For example, you'll be surprised. The second interview which I showed you about the cow economy, I went across to one of those houses and I asked a child to tell me multiples. Okay. So the person spoke in Hindi or Gujarati, like something like that. He was like flying off the shelf like that. I thought, and the kid spoke in vernacular, but I was so impressed with that kid, I can't tell you. So I think to myself often that, fortunately we have, if you're running a bank or whatever, we just have the opportunity that by some freak, luck, we are running we have the power to shape an institution or shape where the resources are going. So I just say, okay, let me use that and build that business. So that's like that. I think a lot of people are doing it, to be fair. Yeah, but thanks for the question, yeah. Yeah, yes, sir. I saw one of the driver's kids the other day who got enrolled in a English medium school, okay, in Don Bosco school, and some driver. The kid speaks English like you and me, right? You can't make out the driver's kid. So when they get the opportunity, they fly. That's about it. Yeah.
Hello, sir.
Yeah.
Myself Srinivas. I'm a teacher. I teach for a government college in Karnataka.
Yes.
See, I'm very interested teacher in fintech. See, my question is, so we serve portfolio management services, mutual fund, wealth management and all for creamy layer of customers. Can we come up with the technology or a fintech kind of solutions to cater only to the retail customers, especially when the sir was quoting about we are looking for 60 million household in a future date. Can we restrict ourselves to, yes, I will going to give investment solutions to the only people who has savings or income less than 2 lakh or less than 1 lakh, kind of a technological opportunity. Can I look at it in the market? Will it be a profitable one? That's what my question is.
It's a really interesting thought. Once I heard of a company which does recruitment services only for blue collar. I forget the name of the firm now. So they don't attend to people like us, only for blue collar workers. And they made a business model out of that. So maybe there's an opportunity there. But the thing is that I really believe that in that segment, we have to figure out a way of doing it digitally. One interesting thing that I would really wish if the country also can move ahead. In fact, I noted down for you here, which a short of time, I didn't read out to you. The agri-tech, just to step away from that line, if the fintechs and technology firms working there, agri-tech can be promoted in the country, because a lot of fintechs are now doing consumer financing. Fine, it's good, it's nothing wrong about that, but that's fine, they're all doing for a living, and they plug data from 20 sources and they give a decision instantly, and like how banks are doing. But agri-tech area, in that zone, the kind of things that are required, the farmers I met, they don't have much view about, they are just routinely for thousands of years, just planting the same, corn or the rice or wheat. If people can tell them, some technology firms are working on it, by the way, of sowing, managing crop, managing seeds, managing fertilizer, managing yields,
drones, precision farming, farm management, softwares, and like how we manage offices. Farm also is managed. It's a software, crop monitoring tools, market connect, connection to government schemes, connection to NSDL, microbiology technologies, satellite technologies. So the technology firms that work in this area can make, how we have seen explosive growth, they can make a massive difference to our agricultural ecosystem. And I think we should find a way of promoting them, supporting them, and I hope something more can be done for them. Yes, sir. Oh, so many hands are there, so make a pick here.
Sir.
Yeah. Yes, sir, please.
Okay. Thanks, Vaidi.
Just send the mic along, folks, because some people are putting their hands. Yeah.
I'm your ex-colleague in ICCI, and I see the same passion, energy, which you demonstrate. You have not changed a bit in so many years. I really loved your presentation and out.
Thank you.
I'm an ex-ICCI. I run up Jivitam, a startup, a technology platform for the vulnerable segments. What you call them blue collars. This is what I deal with. See, the irony is in India, 800 million people are being given free ration.
Just speak closer to the mic.
800 million people are being given free ration, right? That's a reality. There are 50 crore Jandan accounts. 50 crore people have been given Ayushman Bharat. We have reached out to them. It's not reaching out. Government has done its bit, right? We keep hearing about social and financial inclusion in a broad way in the entire last 2 days. I've heard it a number of times. From your side, my question to you is, what it really means in terms of actionable. These are the Munish, if I do these 5 things, yes, the social and financial inclusion is done. Does opening a bank account a financial inclusion? Is giving him an access to credit a financial inclusion? Is, helping him invest in an RD or a, SIP a financial inclusion? What in your terminology, right? And I've been trying to find this question answer. Actually, I don't get that. So this is my question to you.
Okay, the honest answer is that opening bank account is not enough financial inclusion. It's a far better than where people lived in, 800 years ago in dark ages. There was no difference between how they lived then and until 10 years ago. Even they did not have bank account. Even our people did not. So people live like that. But yeah, account opening is a progress since then. But it's not enough. I know, everyone knows that. So even in rural areas, this do-it-yourself, like where people can click and take a loan yourself, it's not working. It's not working, I'm telling you. So there also, we are having our people go to even those, I asked the village how many people have a bank account, loan from the bank, and 60-70% hands went up. None of them did a DIY and took a loan. Our people go, meet them at their residence, and then say that, oh, you need money for a kirana shop, you need money for a cow, buffalo, whatever. And then they carry tablet with them. They do it digitally for the customer. So customers pulling out Aadhaar, which government has done a phenomenal job of putting out this infrastructure, like you rightly said, Aadhaar and all that. So that government has done a great job. But to ride on that curve, our people have to go physically, meet there, get them to do the work. Paper is killed. That's a very big factor. In a microfinance loan, our case, we used to find close to about 28 pieces of paper was being used to give one microfinance loan. Okay, that's how the tax paper were. 280 or maybe 1. Okay, it's gone. So suddenly that amount of digitization has happened. The loans have become digitized. I would say it's even great ESG because we're not cutting so many trees. But still, we have to reach the customer. At least in rural. Yeah, ma'am. Just keep moving, folks. The hands are going up, sir. I hope that answered your question. We still have the, yeah.
Yeah, hello, sir.
Yeah.
I'm Pooja Garg. Was lovely to, see your views and very practical views. I have just a very small question. I wanted to understand your views on supply chain finance and how, how this area looks for you in banking. So. Yeah.
See, as a country, we've had frictions in supply chain finance. We've not done a good job, generally as a system, I'd say. Supply chain finance has 2 parts. One is what we call the anchor. Suppose you're Colgate. Now, there are vendors who supply to Colgate. That is one leg of it. Second is a Colgate having distributor, dealer, that chain. So this is called the dealer, retail chain, and this. Now, the first leg is well banked because typically the entrepreneurs supplying to a Maruti, supplying to a Colgate, they are better off folks. But the second leg of the chain is pretty, very, very not done. But I hear some banks are improving, some new softwares have come. They are stacking up with multiple services. And more importantly, I, in fact, are quite aware that some even technology firms, financial technology firms like fintechs and all, were cracking that system open and banks are plugging to them. I believe it can do better, yeah.
Hello.
Yes, sir. Yes, sir.
Hi, sir. I'm Siddhant Sangvi, and I'm here with my friend Manan Shah. And we're both in the third year of our graduation. And we both are your biggest fans. We are both investors in IDFC First Bank as well. So one question. We both have heard a lot that the next decade is India's decade. But according to you, what is that one problem that India might face or will face that we need to solve to make it India's decade?
Well, see, in my mind, there is really, for many reasons we know, it is India's decade, okay? But I'll just say two reasons because you heard a lot about India. I believe that massive financialization is happening, we talked about there, and serious formalization, formalization is happening, from informal to the formal economy is happening. And that will take, all services, everything down the pyramid. I don't mean only lending. But to your question, what we need to watch out for or what we need to do, I'd say that there are currently large corporates, I believe, have a distinct advantage over the small corporates. Large corporates have size, scale, brand, they borrow at lower rates, they get better talent, they can afford to invest in technology, and they keep sprinting ahead. And the smaller the corporate, you can't hire talent because you can't afford it, you don't have operating profits, and then you can't hire the best technology, et cetera, and then you keep going. So that gap is not is definitely there. And I believe that a certain intervention has to, a conscious intervention, not just market forces-based intervention, certain conscious intervention has to be done to bridge this gap. I've been pushing one idea, I've not got success on it. I've been saying that income tax returns for small entrepreneurs should not be the same as large corporates. We pay thousands of crores of PAT, so we pay 25. So small entrepreneur could probably pay 0 or maybe 5%. And then, I've been pushing this idea. I've not had success though, by the way. But I hope that answered your question.
Hi, Vaidya. Thank you. Excellent presentation. So I have a question about extending the borrowing detail that you gave into the investment side of it. You've already described, right? If I take two parts to it, one is access, the other is trust. If it's IDFC first, the moment you've solved the access problem, right, a smart lender like IDFC can solve the trust problem and you can get money in the hands of the borrower. When it comes to meeting the investment need, right, the access problem being solved is only the start of the solution because they have to trust you.
Correct.
To give you their money.
Correct.
Now, if you were State Bank of India, he knows the brand, he knows there's a branch and so on. If you're IDFC first, he still may know IDFC first, but to give IDFC first the money is not as easy as giving to SBI.
Correct.
But if you're a fintech and if you're an absolute startup, then you don't even have the advantage that IDFC first has.
Correct.
So how big is the problem and what needs to happen to solve that problem?
If you're interested, the video which I showed, what I showed you for a minute, it's actually like a 1-hour video. So something interesting I'll tell you. I asked that group of people, how many of you have an insurance? Okay? And everybody's hand went up for LIC. Not everybody, like as many hands went up, they're all LIC. Okay? Now in terms of bank account, probably they'll all have SBI. So I first of all agree. If you think of the brands in India, you think of SBI right on the top. If you think of ICICI, HDFC, they're right at the top. They're what you call the TOMA, top of mind awareness. For these brands is 73 to 74%.
the top of mind awareness for IDFC First Bank is 22%. So we're here, and they're there. So we know that, and it'll take time to build brands. But your question on trust, we believe that being known is a good thing in the financial services, but to be known for what is, when people think of you, fine, you know, I'll show you a video. I played at the AGM. I asked a lady, I was at Hinduja Hospital for some small checkup, and I asked her, have you heard of IDFC Bank? By the way, this is in Mumbai, in the Hinduja Hospital. She said, no. She said, I said, you not heard about IDFC? She said, no. She said, I said, what are the names you know of? She said, I heard SBI. I said, RBI. By the way, she said RBI. Okay, I said, I heard RBI. I said, SBI. She said, 2-3 names. And IndusInd something because it's Hinduja's, bank. So, this is the truth. Okay, it will take time for brands to get built. But what you're known for is important. We believe that the way we make our products, we can say whatever we want about ourselves, your tagline, but they're meaningless things. So we say the tagline, the way we make the products, if we are clean, they're ethical, at least the person who experiences us will say it's a good bank, right? And then over 5, 10, 15 years, the brand gets built. So I don't claim to be up there.